All right, greetings everyone. This is Eric, a founder and CEO of Cubicle Investing. Definitely visit the website at cubicleinvesting.com. And there you can download my free ebook that will teach you the basics of options trading. And also, if you download the free ebook, you will be automatically put into my email distribution where you will start to receive my weekly newsletter that comes out every Monday at 10 a.m. Eastern Standard Time. It's called the Cubicle Weekly Reader, and I talk about various topics from economics to finance, of course, the stock market, cryptocurrency, etc. So you definitely want to be a part of the Cubicle Weekly readership. Okay, so today is, give me a second here. Drinking my organic super greens drink. Definitely, health is extremely important. Health is much more important than money. So without your health, certainly money is a non-factor. So you definitely want to take care of your health. But nevertheless, today is Saturday, November the 19th. It's approximately 1:42 p.m. So of course it's Saturday, the market is closed. But I wanted to review what took place yesterday, this past Friday. I was actually too busy to trade, and so obviously I didn't trade. But nevertheless, the market, if you watch my previous video where I spoke about, gaps and how gaps are often filled during the same trading session, and having that knowledge can actually help you, assist you in selecting your strike prices for your vertical spreads, if that's what you primarily trade, which is what we primarily trade here at Cubicle Investing. We primarily trade vertical spreads, although we do trade naked options from time to time, but it's primarily vertical credit spreads. So yeah, so just wanted to quickly speak about what happened yesterday, which was November the 18th. And so again, as I mentioned before in previous videos, I always look at the previous day's closing price. And so the previous day's closing price, which was November the 17th, was 39.46.56, right? And so when the market opened yesterday on November the 18th, guess what it did? It gapped up, right? So it gapped up. Let me just pull up my pointer here. So it gapped up. Let me just. All right, so I'm just drawing the gap here. So looking at the previous day's price, right? So it closed at 39.46 on Thursday, and on Friday it opened at I have it written down here, 39.66. So it opened at 39.66. Right? So a 20-point gap up. So a 20-point gap up from the previous day's closing price. So now, as I mentioned before, conventional wisdom says that when you experience a significant gap in the market when it opens, conventional wisdom says that it's highly likely, it's highly probable, right, that the price of the underlying, and the underlying in this case we're talking about is the SPX. So we're talking about SPX. Well, actually it's right here. Right, so there's a high probability that during the same trading session that the price of the underlying will fill that gap, right? And so as we can see here, the price opened up at 39.66. It got as high as 39.79. And so this here's a 15-minute chart. And so this candlestick represents 15 minutes worth of price action. This one here is the next 15 minutes. So these two together represent the first 30 minutes. And so as you can see, immediately, roughly about 30 minutes after the market opened, the price did what? It started to retrace back down, and it did what? It looked to fill the gap, right? The gap that was made looking at the previous day's closing price and the opening price of the market yesterday. And so the price actually, it jumped here. And so just knowing, just having that information in mind, it gives you the opportunity to put on a high probability trade, right? Now, notice I didn't say, the trade is going to be a certain winner. I'm saying that having that information, having that knowledge, knowing that, prices, gaps often get filled during the same trading session, and of course, using other information as well as a trader, you can put the odds in your favor of actually winning a trade. So you could have easily put on a vertical call credit spread at maybe, 4,000, right? Selling the 4,000 strike price and maybe buying the 4,005 strike price, right? Now I don't remember what the credits were on the call side yesterday, but nevertheless, I'm almost certain that once the price hit 39.79, you could pretty much get a decent credit at the strike price of 4,000. And so again, that would have been a high probability trade. And also looking at the expected move for yesterday, selling a call option at the strike price of 4,000, if I remember correctly, was I gotta look at I don't have my spreadsheet up, but it was I believe it was above the actual expected move as well. So you would have been above the expected move. You would have, the fact that it gapped up. There's a high probability that the price is going to retrace and fill that gap, so it's going to come back down. And because it comes back down, if you put on a vertical call credit spread, your vertical call credit spread would actually benefit from the price of the underlying SPX actually decreasing in value, which is what it did here. It decreased in value. So you would have been able to get out of that trade probably around, let me just clear this stuff out here. Around 12 o'clock, 12:15. So you would have been able to exit that trade, early on, and you would have been done for the day. Now, of course, as you can see here, as the trading day progressed, the market actually bounced roughly around 2:45, and it went back up and pretty much, it closed at 39.65. So it opened at 39.66 and it closed at 39.65. So basically, it did a round robin, if you will. So yeah, so again, just know that when you see these large gaps right out the gate when the market opens, whether it be a gap up or a gap down, just know that there's a high probability that the price of the underlying SPX is going to look to fill that gap during that same trading session. So that definitely is information that can help you out and increasing your odds of winning your trade. All right, so yeah, so I just want to make that quick video. So again, if you guys haven't already, please subscribe to the channel and also like the video. And hopefully you guys are learning something from these videos that I've been making for the last, I guess, 6 weeks to 2 months now. So yeah, so I appreciate you guys for actually taking the time out of your day to view these videos. Time is our most precious asset. So the fact that you are actually taking the time out of your day to view these videos, I'm definitely appreciative of the fact that you're taking the time out to watch these videos. So thank you again, and have a good one.